Hey everybody, Boris Tasser with BK Force. Welcome to the weekly technicals for August 14th to August 18th of 2017 for Euro dollar, dollar yen, and pound dollar. And the story as we start this week is really that the turn in the dollar that we were looking for last week just did not happen. The data did not confirm a turn in the dollar. As a matter of fact, as the week came to a close, it actually rejected any notion that there needs to be a rate hike in the US before the end of this year. The CPI data, the PPI data all came in colder than expected, that is, lower than expected, pretty much destroying any Fed argument that the US economy is boiling point and therefore requires any further tightening as we go forward. Combined with the fact that we had North Korea geopolitical tensions, and finally, as I speak now, in a very tragic weekend of events that we've had in Charlottesville, Virginia, we are basically embroiled in a yet another terrible internecine battle in the U.S. All of this just combines to create a very negative investor attitude towards the dollar, and it makes it extraordinarily difficult to see any way, shape, or form that you're going to get a strong dollar rally this week, especially because the data as we look forward really is non-existent. We don't have anything here that's supportive on the data set. Really, the only hope of dollar bulls at this point, as far as any sustainable, discernible rally for the dollar, is the assumption that the Congress is somehow magically going to get its act together and start working on tax reform, which would be seen as majorly stimulative to the U.S. economy. But it seems at this point that Washington, D.C. is in a complete disarray. The country is certainly very torn up politically, and all of that continues to weigh on the dollar in a massive way, especially as the data is just not there to support us. So as we start this week on a data set, we can see that basically nothing here on the calendar on the US side of any real import. In fact, we don't even really have anything until we scroll all the way down to, I believe, Thursday with Philly Fed and then U of M. It's really just those two things that on the US calendar provide any kind of catalyst on an economic basis. We are a little bit positive on the U of M, sort of very neutral on Philly Fed. Nothing really here that's going to project the dollar. Oh, we have the Fed minutes. I'm sorry. We obviously have the Fed minutes on Wednesday. But then again, here is one of those things that could have only very short-term positive impact on the dollar if it's hawkish, simply because whatever the Fed says doesn't really matter. It's facing a cold, hard reality of risk aversion and low to non-existent inflation. In fact, we're seeing deflationary pressures in the U.S. economy. So those are, I think, far greater points on the fundamental side that is driving the dollar down. It's certainly oversold. Certainly, looks for any kind of a short covering rally, but don't bet on that because you just don't have the kind of catalyst to create a short covering rally off the dollar unless you have something super negative on the European side. Now, as far as the European side goes, we also don't have that much of a calendar in Europe. We do have European industrial production, German GDP, which all of this is sort of very third-tier data. GDP out of Europe, which will be interesting to see only, I guess, in contrast to the US GDP and see if both are now starting to really operate on a full basis. I forgot one other thing on the US side, by the way, the housing data. Again, housing data is important, but housing data has not been super supportive. They really have to just blow off its numbers. And so far what we're seeing is sort of, slow but steady growth in housing data. Housing used to be an incredibly important part of the US economy and simply hasn't been able to pick up the kind of momentum that it needs to see for the market to get excited about it. That's it. As far as European data goes, that's pretty much it. We don't have a CPI, PPI, all sorts of mildly important data. The only real import data of this week in the majors will be the UK stuff. Now, UK is kind of very interesting because I think cable is sort of the second weakest currency of all the majors. In fact, I think it's JP Morgan Chase that came out this week suggesting or even projecting that it's going to be sooner than later that pound will be trading below parity to the euro. And that, I think, is one of those super interesting long-term trends. We'll take a look at that in the crosses that is certainly developing itself technically, and we should be paying attention to. Now, as far as UK data goes, we're bearish UK data. We're negative the CPI PPI data, meaning that inflation is sort of also going to be more muted than the market says. Remember, the only reason that cable requires bullish data is because of hotter inflation. And if the inflation is relatively tepid, then yes, we're going to be very bearish cable, and it could show relative weakness as the week progresses. One other thing I forgot. I'm sorry. Actually, this is probably the most important aspect of the U.S. data set, which is on Tuesday the retail sales numbers. This has been a naggingly weak aspect of the U.S. economy. In fact, it's been, to me, the primary argument for why the dollar is a sell, not a buy, because the consumer, despite the fact that jobs have been very, very strong, the consumer has been a complete and abject disappointment for the market for 5 out of the last 6 months. Again, the market is looking here for a hot number. Again, it's looking for a bounce back. Now, we are actually bullish this number, with because there was stronger average hourly earnings and we had higher gas prices on a gross basis. But just because on a gross basis the number may be hotter, on a net basis, really ex auto, ex gas, that's really the number you want to be looking at. This is still a very big question mark. And in fact, I would argue that if this number disappoints again, it's going to be the stake in the heart of the dollar, and it's going to drive the dollar right back, especially dollar yen, right back towards its recent lows below the 108s. So in many ways, Tuesday will be the tell-all day for us on the U.S. side as to whether the dollar can climb out of this sell hell, or whether it's just going to continue on its way to the downside. Now, looking at the levels this week, the levels basically in the dollar are euro dollar 119 to the top side. That's been the high in the recent run-up. 116 is still very, very firm. Support has not been broken at all. With dollar yen, this is the 108 now becomes the super important support. We took out the 109s. The 108s is the most natural area, and 110, which was former support, now becomes current resistance. With pound dollar still within this 129, 132, but I'd be watching this 129 level to the downside, because if that gets broken, that really plays into this whole area of euro pound strength. Taking a look at the charts here, you can see that the chart on the dailies on the euro still looks quite good. We held well above the 116 low, and it still looks like it wants to run towards the 119, 120. And I certainly would give it the benefit of the doubt here, especially if the U.S. data begins to miss. Let's take a look at the weeklies here, just to see. And the weekly also looks quite good. They bought the lows, ended on the highs. Still, this 119.10 is the operative top, but it looks like it really wants to make a second run towards that top. On the weeklies, when you look at the yen, it's just disaster. We're pretty much at the week's lows. We're filling the gap over here. This low over here now is 108.40, 108.50. That's the key low, and I think if that gets broken, it takes us all the way down to 108 easily. So I'd be watching those areas very, very carefully. And of course, with cable, as I said, this 129 is the very big support area. 132 is the big resist, which we far away from right now. If cable turns weaker and we break the 129s to the downside, it opens up the run right back towards the 127 support, puts cable right back into a very negative structure. So that's how the week shapes up. It still looks very negative for the dollar, and if it doesn't get any support from the retail sales numbers, it's going to be very, very hard to see how the dollar could stage any type of rally as we go forward.